We have Rohit Srivastava now joining in. Good time to get some perspective in also looking at technicals, because there are rarely any fundamental reasons that you can cite for the kind of decline that we are in the midst of. Rohit, hi, good afternoon. Great of you to join in. So what do you think is happening out here? I mean, is it just pre-election jitters? Again, more than the reasoning, because we don't have clear answers to it, I think it's important to look at the texture, nature and the technicalities of the fall. So, fill us in over here.
So one of the ways to look at it is that we have seen a lot of rotation in the market since January. For a long time, it was looking that rotation is toppish. That was sort of our view. But somewhere we've recently started to think that given the time it has taken, it could also be that it ends up being a long winding consolidation where individual sectors or stocks corrected a lot. Others which have not are doing so. Some of them are doing it now. For example, you see it in large caps like Reliance Industries. So there is that shift. For example, you have strength in the weakest areas coming back, which is FMCG, IT. Those are some of the weakest segments of the market seeing strength in the last 4-5 days. And you're seeing some correction or weakness in areas that were very, very strong, whether it's PSUs and oil and gas and so on. So I think this is one part of the texture. And can we really continue to move ahead with that kind of rotation? Because if I look at all the bottoms that we made in the market, say the bottom we made in late January was closer to around 21,100. Then we moved on to make it closer to 21,700 sometime in March, and then a little above that in April, 21,7 something, 767 or so. Now we are getting closer to so if I touch a line of all these bottoms, the bottom line comes in at around 21,930. So that can sort of be the next major support, and we have come very, very close to that. The risk is, okay, what if you break this level? What will happen? Now, if you break this level, especially tomorrow, it's the weekend. If we do break that, then there is room for it to fall to around 21,200. So that's around another maybe 600, 700 point downside if we break below this. But if by tomorrow we are able to recover back, say to 100 or so, then that would be a positive sign that we've held the weekly support levels for the nth time and possibly can move up again from here. So that's what it's going to be like. We may start seeing some very oversold short-term readings, but it's with the market. It's like a falling knife. Unless it actually starts showing a recovery, we don't know whether the oversold reading is going to get more oversold.
Rohit, the Nifty RSI, etc., is about 40-45, right? Now?
On the daily chart, yes. On the hourly, it's already dipped below 30. So on intraday charts, it's already there. We do use something known as a momentum swing indicator for very short-term highs and lows. Usually, if it gets to single digits, we say it's very oversold. Right now, that is reading only, it is oversold, but not extreme. So it is reading at around 17. Okay. And we have seen readings below 20 also result in markets bouncing back. But like I said, till you actually start seeing that positive momentum. So I look at the swing, I look at the hourly RSI, but I need to actually see some positive momentum to feel that, we are done here.
What about the FI positioning in index futures, etc.? What is anything to glean from that? In cash, of course, FIs have been sellers. I mean, again, that is, I think, useful only at extremes, right? And it's not here or there.
So it was at an extreme on the 24th of April because there was 1 lakh short contracts by FIs, and then that led to that all got covered, last few days back. Yesterday's reading is still only a minus 91,000 contracts. And remember, I'm saying this is the adjusted number after that drop from 50 to 25 per lot. Right, so this 90,000 number would have been much less, be around 45,000 based on the older numbers. So it's not a huge short position in that sense, because unless you are more than 2.5 lakh contracts short, we don't say it's a short covering bottom. But either it's not long, not short. So I think FI data is not really, positioning is not really telling us much right now.
FMCG stocks were showing some signs of life, particularly at the beginning of the week. Then again, yesterday and day before, they've not managed to follow through with buying. If there is a lot of rotation, if there is rotation which is going to take place, where does FMCG stand in names like an HUL, Dabur, GCPL?
So they'll still look like outperformers, right? What we do is, like, for example, this fall started around, we can either say it started from the 30th of April or at the subsequent high on the 3rd of May. And subsequent to that, if we just look at the strength and weakness, we'll still find FMCG at the top of the list in terms of strong sectors. So that means that in this fall, we would still think FMCG is the sector to go to, because that is showing the relative outperformance during a decline. That is how we look at it. So it's more of a timing thing. I mean, till yesterday, those stocks were up. Today, they may be down because the market is under such pressure, but they're still outperforming on a relative 5-day, 7-day basis. So that doesn't really change the strength that they're showing. Same with the autos, right? The auto index made a new all-time high today morning. That's still showing relative strength compared to the market.
All right, Rohit, hi, good afternoon. Nigel on this side. What about the Nifty Bank? That's the one that's taking a harder knock in the last few sessions. I missed the levels that you were talking about, if at all, on the Nifty Bank. It broke the 20-day MA. Now it's just broken the 50-day MA. The 100-day MA is another, 400 points away from current levels. So what's your reckoning out there? We were talking about 50,000. Now we need to be content with 47,500.
Yeah, so if I take a trend line of all the bottoms since the February low, around the 12th of Feb that we made, to the subsequent ones, we've touched that line again on the 20th of March, then again on the 19th of April. And that line currently comes in at around 47,250. So that's, I think, the last line of support for this sell-off right now, because if that breaks again, then we'll start looking at, a deeper cut, possibly going back to the weekly ranges, which so far have not really broken. In Bank Nifty, in fact, recently it was starting to look like it's starting to hold out or outperform. It breaks that, then we open up room to around 45,160. So we'll have to watch. Does it really break, 47,220 tomorrow, or does it hold that? That's going to be an important level.
Rohit, and some of the global stuff is also kind of it stopped mattering in that sense, right? I mean, of course, not long evidence of it, but after that jobs data last Friday, we got a meaningful cool-off in yields, US yields, etc. So this is very local, whatever is happening, nothing to do with some of the global stuff which is going on. Last 2 days, of course, US has also been very, very quiet.
Yeah, it's very, very much local. You're right about that, because you did see European indices, for example, hit all-time highs in the last couple of days from France to Europe. We're seeing that happen even in places like China. China made a 9-month high today. You're seeing that in the Kospi. You're seeing that in Taiwanese stocks. So essentially, you're seeing a comeback in Europe, emerging markets, all of them showing very strong trends. And so that really tells us that whatever is happening here, as you rightly pointed, is domestic. I tried speaking to a couple of people. Everybody's concerns are around what is happening, with the election results. Is the lower turnout going to mean something? Some people pointed out yesterday's speech by, Narendra Modi, Shri Narendra Modi, really being taken as a concern by some traders that, is it, does it show some kind of worry? So people are trying to really guess this game as we are, coming closer and closer to the result outcome. That, how good is it going to be? But I think more important than if it's going to be good, then eventually things turn out better. It's only if it's a complete loss do you really get worried, which looks less likely the case still. So I guess as long as that is true, this market panic may give us an opportunity to just buy at better levels.
Okay.